Good afternoon. Welcome to another Wall Street Wednesday. Today is April 21st, 2021, and this is episode number 45. As usual, I'll wait for a few minutes to see, give people a time to join in. What's up, Lance? How are you, sir? Sasha, how are you? Again, just a quick reminder, which I always do to you guys. And by the way, this is being recorded, so that's why I'm doing it. But just a quick reminder again that these are my opinions and thoughts. Any recommendations that you might pull from this, or you might think you pull from this, please speak to your financial advisor before doing anything. Again, these are just my thoughts and opinions. Hey, Natalie, how are you? Welcome. Well, I got a lot of things to talk about today, so I'm just going to give people a few minutes to jump on, watch the market close, watch the cryptos. I got a few things to talk about, especially for my, what's the word I want to use? My not so experienced investors. So I'm going to talk about a couple of things. So welcome. Thank you for joining. I appreciate you guys. Just give people a couple of minutes, like I said, a few more minutes to join in. Anybody trade the IPO today? UIPath, that was pretty exciting. I believe it's the largest software IPO to come to market. So it's a pretty big deal. Interesting story about that too. But again, I'll talk about that in a little bit. Just want to let you guys get in. Lance, I know you've been watching corn. So corn's on the run again. The commercials of, every time it runs, the commercials get net short. So they're net short again at, record levels. But again, corn has run. But I'll talk about that in a little more. So I give you, you know what? In fact, you know what I'm going to do now? So I can pull on my pad in front so I can see it. I'm going to change up a little bit. So what I mean by that is when I give my commodities now, when I talk about commodities, I know before I've given people a lot of commodities where I said on the commodities, hey, Brian, what's going on? Hey, Nicholas, Christian, what's going on? I know in the past when I talk commodities, I would tell you commodities that had fundamentally broken out or fundamentally was saying it's a short or a buy, and I would say to you, wait for the technicals to go with it. Well, what I'm going to do is I'm going to modify that. So what I mean by modifying that is I've seen, so I'm going to give it to you. 1, 2. On the long side, gold and the yen currency. Gold and yen are running. All right. I got the buy signal on the fundamentals from the commercials, and they broke above their 10-day moving average, and they're running. So those two on the upside are running. On the downside, all right, the commitment to trade report's giving me a sell, and it's broken down and started to move down. Look at live cattle. Now, one thing about live cattle, which is very interesting, it's a very thinly traded market. So it's easy to get squeezed up and squeezed down. But I would take a look at those three. So again, on the long side, gold is running, the yen is running currency-wise. On the downside, or short, what's moving down, I would look at live cattle. Live cattle has literally started to break down. Hey, what's going on, twin? So I wanted to bring that up before, again. So now when I tell you about commodities, I'm going to tell you about commodities that have given me both a technical and fundamental either buy or sell. So I'm going to take it a little step further. The reason being is because some of these things I was giving you on the technical side, on the fundamental side, the technicals weren't breaking down or weren't working as quickly as what, so people were losing, or I would say losing interest, but people just weren't following it. So now I'm just telling you right now that these three are running. To the upside again, gold and the yen. To the downside, I was talking about live cattle. All right, so I got that covered, took care of that. A couple other things, just a little housekeeping. As you guys know, one of the things I which we all look at is the VIX. Looking at the VIX, as this market was basically pulling back and had some down days, and I was watching the VIX. And you guys know I've talked about my VIX strategy where I use the Bollinger Bands to look for extreme moves. The other side too is I get two signals out of the VIX. I only use one. And the two signals are when it gives me a buy report. In other words, when the market is oversold, when it gives me a buy signal. So with that said, the VIX gave me the VIX is basically it's telling me that the market was not oversold yet. It came really close to being oversold, but not oversold yet. We had the bounce today, but again, the VIX did not give me that read. The one thing the VIX did tell me, though, if you look at it, is that with the Bollinger Bands, is that the bands have narrowed. The bands have come together, which means volatility's come out of the market. When the bands are wide, you have volatility. When the bands are narrow, no volatility. So the bands have narrowed up. For what that means is volatility has basically come out of the market a little bit, even with the days we just had. So it'll be interesting to see what happens from there. All right, there's Twin. All right, so I got that. Now, what else do I want to talk about? Yesterday, I started putting together a comment or talk about CoinBase. As you guys know, CoinBase went public last week. I made the comment to you, I thought the stock would work. I thought the stock would go higher. Did some digging. And a couple of things happened. One thing that happened was I got to look at the final prospectus, the 424. Since it wasn't a IPO, it was a direct listing. It took a minute for it to come out, but it did come out. The insiders, the founder actually sold some stock, not a big portion. He has two classes, Class A, Class B. Class A has voting rights of 1-to-1. Class B stock has voting rights of 20-to-1. He still controls, I can't remember the exact number, but he still controls a major portion of the corporation because he still owns a huge position in his Class B stock. But what was interesting is there were several other insiders, senior management, and one or two smaller funds that actually sold a significant portion or sold all their stock. So I found that interesting. Usually, as you guys know, when I start talking about IPOs, one of the things I look at is who's involved and how much stock they sold on the deal. So that kind of made me a little leery. Then I went and looked at the chart. And I wrote this up yesterday, but I did not, as you know, that was yesterday, today's today. And I said, if Coinbase breaks 320, it looks like there's some major support on Coinbase at 320. If it breaks this 320, this thing could go down a little further. And lo and behold, Coinbase did break that 320. It closed today. I'm looking at it now. Closed today at 311, 312. Went as low as looks like about 303. I can give you, you can get your exact numbers. Now, the reason why I bring this up is when I mentioned this to you, Coinbase has so much hype in it. I'm not saying it's a bad thing. I'm just saying that so many market participants were looking for this thing to really run, and they started buying it, that I thought the stock might be way ahead of itself. So again, I'm not arguing with the numbers. I'm just telling you I thought the stock could be ahead of itself. I haven't done any valuation on it, although it is at this point really rich based on some fundamental valuations. And I thought the stock would pull back. I'm not sure where it goes from here. Volume has dried up, but there seems to be no interest right now. So it'll be interesting. I know one of the firms came out with a buy recommendation on Coinbase, but again, and I'm going to talk about this a little later on, the dips, but I would not be a buyer down here. I would wait. All right. I'll give you a little example. I went back as I was doing this. I went back and looked at Snapchat, which changed the symbol to Snap. Snap is NAP. And Snap had a whole bunch of hype in it, came out public. And I know some of you guys on this call were in my class and we actually did a valuation on Snap and we actually recommended selling on the opening or shorting it. So I went back and looked at Snap. All right, Snap got ahead of itself. Everyone loved it. Everyone to be involved in it. Snap opened up, and I'm here to tell you, the first day or 2 days it said, it went to a high. I don't remember what the number is, but it took 4 years. Let me say it again. It took 4 years for Snap to get back to its opening day high, opening day's high. All right, I'm not saying it's going to take that long with Coinbase. All I'm saying to you guys is that you guys are investors or traders that don't get caught up in the hype. Be patient. See what this thing's going to do and settle down. If it starts to run and goes through that old high around 420, 425, 430, then you can look to buy it. I would not be aggressively buying it down here. Now, this leads me to one of the things I really wanted to talk about today. I had a conversation with, a young man today. And one of the things he brought up was, he said, do you think the cryptocurrencies are in, a bubble like the Dutch tulips? In other words, are they in the bubble? And my comment to him, and I'm a comment to you guys, is the same thing. And I'm going to go into some conversation here. So for those of you, come on, computer went to sleep. For those of you who are long-term, have been investing and trading for a while, this might be redundant. For you newer guys, I'm going to say a couple things. And today I'm going to talk about more your mindset than the market, what's going through your head and how you're doing things. So let me explain what I mean by that. All right. In my trading life, and I've been at this for, as you guys know, I've been at this now since I was in my early 20s, mid 20s. So I've been at this for a while. In my lifetime, I've seen a number of bubbles. The first one I saw was the leveraged buyout bubbles in the late 80s. What they were doing was they were valuing all companies based on what they were worth if they were broken up and sold. So you had companies come to mind, Ford, Disney, that their stock price increased 30, 40, 50, 60% in 1 or 2 days or 3 days, because what they were looking at was they weren't looking at the business. They were looking at if the company was broken up and we sold off those assets. What were those assets worth in the marketplace today? That's because there was a huge leverage buyout that was going on. Everyone was being taken over and acquired aggressively. You guys know the story. That was the first bubble I saw. The next active bubble that I got involved in that I really saw up close and personal was the dot-com bubble. You put the word .com behind the stock and that stock was going to go up in price. Didn't matter if they were making money, didn't matter if they were losing money. All the community saw was you put the word .com on it and this thing was going to explode. And as the market came to realization that these were the companies that weren't making money and that we were just buying the name, it really sent the market crashing. As you know, it actually sent us into a recession. Then from there, we had, in your guys' lifetime, you probably saw was the real estate bubble. All right. And you guys saw this. And you guys know this. You all know some family members or friends or people you know that said, look, I brought some real estate. I brought it over the phone, didn't even go to the property. I held it for 2-3 months and turned around and sold it for 10-20% profit. And they all talked about flipping and how easy it was. Now, in my experience with all those bubbles, a couple of common threads came through. One, the average person who knew nothing about those particular markets and about investing or trading or anything were telling me how easy it was to make money in the market. How easy it is, just buy it and sell it. You had people that were cashing in their conservative investments, CDs, money markets, and so forth, and going out investing in stocks and real estate. Now, the challenge you have with a bubble, and I've traded bubbles, you can make a lot of money in bubbles. You just don't want to be the last one in. The last one in is the one that's going to get hammered the most. All right. Now, let me take this a step further. The reason why bubbles form, let me say it again. The reason why bubbles form, and it's key that you get this, is that the market participants, the community, the people in the country who've never invested before, who start to invest, they look at it and say, there's no risk. Just buy it and hold it. It's going to go back up, or it's going to go up. If it comes down on the dips, and this is what got the whole thing started me, buying on the dips. If it comes down on the dip, just buy more because it's going to go back up. Those are a pure sign of bubbles. The market is structured, and every time you invest, you have a partner. That partner is risk. Risk is always there. What happens in bubbles is investors don't see the risk anymore. They don't think it's risky. So what they do is they end up investing too much size. They become aggressive with it. And the reason being is they say, this is easy. There's no risk involved. A statement that was made to me as a young broker, which I'm going to pass on to you, and I've said this a number of times and I live by it. The market will do whatever it takes to prove the most amount of people wrong. So, and I want you guys to think about this. You guys have been looking. When everyone you're talking to tells you how great the market is and how how much money they're making and how you just can't lose, that's when you need to get nervous. When everyone's telling you how bad the market is and they won't touch it and it's a gamble and it's so risky and how can anybody do this? Put a smile on your face because that's when you want to step in and start buying. Now, why do I say don't buy on the dips? This is coming up, and before I even go any further on this is coming up because of the cryptocurrencies. Now, before I go any further, the cryptocurrencies are a new asset class that is here to stay. I'm not saying cryptocurrencies aren't going to be here for the next 20, 30 years. It's not what I'm talking about. I'm talking about those people going out there right now and trading, and you hear them. I'm just buying on the dip. Just buy Dogecoin, it's going to go up. It's always going up. Just buy this, it's going to go up. Just buy GameStop, it's going to go up. All right? These are bubbles. You can have bubbles in individual stock. You can have bubbles in the market. The cryptocurrencies now are entering to a bubble. And the reason why I say that is all I keep hearing about is just buy them, just buy them. Don't worry about it. They always come back. If it dips down, just buy it. I'm going to say something to you guys. If you're taking too big a position and you buy the dips, that one time it doesn't come back is going to wipe you out. Let me say it again. Am I trying to scare you? Yeah. The reason why I'm trying to scare you is to make sure you understand there's risk involved in everything you trade or buy. So if you're buying these cryptos, look, I'm going to start trading the cryptos. I've been watching it, trading it. I'm looking at the charts and all that. I'm going to step in and probably start trading it. Right now, I understand when I'm trading into a bubble. I understand that any one day, I don't want to be the last one holding this. The other thing I'm going to say to you is do not buy the dips. If you do any type of analysis on any of these stocks in the past, any markets, any security, any asset, when these things start to sell off, the dips, you don't buy the dips. The problem you have is you don't know when it's going to sell off. So it pulls back, and first thing you're saying, well, I'm going to buy the dip, because it always comes back. I'm telling you, sometimes they don't come back for several weeks, several months, and some never come back. I can start pulling up stocks left and right that if you brought on the dip, you're sitting there and you're looking at yourself going, this is crazy. Now, my philosophy is, and also if you look at the technicals, if you start looking at charts and start looking at these things, if you buy every time a stock sets a new high, if you add to your position when the stock's setting new highs, you have a better chance of not losing money on the dips. Now, when you buy a stock that's going through new high, of course, you're going to put your stop loss in, you're going to hedge yourself, you're going to do everything that you need to protect yourself. But the other thing too is, if you're trying to buy the dips off of stocks that were going high and then they pull back, there's a reason why they pull back. All right? So get that out of your mindset, buying the dips. All right? If this was a mutual fund, yeah, buy a dip. If this was a, ETF, buy a dip. If this was the S&P 500 and you had a long-term vision on this and this was your portfolio that you plan on holding this security in your portfolio for the next 20 years because the company's doing good, then buy the dips. If you're doing any type of trading, which is basically when you guys start saying, I'm buying Dogecoin because Reddit talked about it, you're a trader. Whether or not you like it or know it or not, you have become a trader. And if you become a trader, I'm here to tell you something. You better be careful buying those dips. Use your stop losses, orders, be disciplined, watch the security trade every day. Because I'm telling you, when this thing turns and goes down, you're going to be left holding the bag. All right, so I said a lot of things here. I'm going to say it again. When bubbles come, and they always come in markets and securities, the main reason why bubbles form is because people that normally don't invest, nothing wrong with that. We all had a beginning. We all had a start. But people who normally don't invest start jumping into the security of that market or whatever that asset is, and the first thing they tell you is there's no risk in it. And that's why the bubbles form. And that's why the price keeps going up. You guys saw it in the real estate market. You saw it. And all you guys are old enough that you've seen the bubbles in the real estate market. All right? That was a bubble. After the real estate market bubble, we had a bubble in oil. All right? Bubbles do form in individual markets. And the thing about it, when these bubbles burst, when they do burst, no buyers show up. They come and they come down and they come down hard. Two reasons why they come down hard. The people with the knowledge who based on look at fundamentals and technicals and all that say the stock is way overpriced. So therefore, because the stock is way overpriced, it's, when the bubble does burst, it's going to come back to its intrinsic value. It's actually what its true value is and probably go even lower than that. When the real estate bubble burst here in California in 2008, 2009, when that bubble burst, there were houses in this country that you could buy for less than what it cost to actually make them. In other words, if you brought that same land and was having a house built, you could have brought a house for less than what it cost to have it built. Why? The bubble burst and all the buyers disappeared. And this, not only did it fall down to its intrinsic value, its appraised value, but they went below the appraised value. This happens in bubbles. Now, what's really interesting about this is that when these markets come out of these bubbles, these assets in those markets are typically undervalued, underpriced, and that's typically when you want to buy them. I can't explain it to you any other way. Keep in mind what I said to you. The market will do whatever it does, whatever it takes to prove the most number of people wrong. And the other thing about it is, when you hear the little, and trust me, I'm not making this up. When you hear the little old lady say she cashed in her CDs to buy stock, she cashed in her CDs to buy cryptocurrency. When you start hearing people that don't invest, people that normally don't do these things, and they start talking about how easy it is to make money, how good it was, how easy, just buy it, you'll make money. They are not taking risk into account. When they start taking all their capital, all their investment capital, and even then some, and putting into a security, you know that they don't have respect for risk. They don't even think they can lose their money. And that's when the market's going to bite them. That's when that security is going to bite them into you know what, and they're going to lose money. And those are the ones that say to you, Professor Milligan, investing is gambling. I'm never going to do that. That's gambling. The reason why? Because you were gambling. That's what you did. You took a gambler's mentality. All right. I'm not here to beat you guys up. I'm just trying to help you understand your mindset. Do not get caught in that. Remember your fundamentals. How much are you gambling? How much are you putting on the trade? Don't put all your money, 5, 10%, 20%. The more you put on it, make sure that you're hedging that position then. Stop losses are not hedges, all right? Make sure. Thank you, Christian. By the way, for those who just saw it, Christian just posted a comment. Christian's one of my former students. Christian actually is a institutional trader. This is what he does for a living. I think if you would have talked to Christian, Christian would probably back up everything I'm telling you from his own experience. So, and also Richard Revere, same thing. So all I'm saying to you guys is make sure that you recognize that there's risk. Make sure that the risk is there. All right. If you don't think there's any risk, it's gonna be painful. I don't want you guys to go through a lot of pain. I'm trying to give you what I know. Trust me on this. I've gone through a lot of pain. I'm trying to give this experience to you. So let me say it again. 1, if you're going to trade these cryptos, remember, there's always risk. I don't care what they say on TV. I don't care what Mark Cuban says. I don't care what Elon Musk says. Anytime you're investing, there's risk. All right? Respect the risk. The next thing is make sure that your trading size is either small or something that you can handle if you lose all the money. If you can't afford to lose all the money you put on that trade, then you're trading too big. If you're trading that kind of size, then figure out ways to hedge your risk. And again, stop losses are not a hedge. A stop loss order is nothing more than an order to tell your broker to sell something because you couldn't sit there and watch it or you couldn't get to the phone. All right? Stop losses are not, repeat, not a hedge. A hedge is another asset that when your security goes down in value, the hedge will go up in value. Or if you're hedging for a short, as the short goes up in value, which is going against you, the hedge the short goes against you and goes up in value, the hedge will also go up in value. All right? Hedge your trades if you're going to trade large. The one time that you miss that bite, you're going to appreciate everything I said. Now, I know some of you are going to say, well, Professor, I brought the dips before and it's worked for me. You know, every time it's come down, I brought it. You're not following me. It's that one time that you don't respect the dip. It's that one time when it pulls back and you say, oh, it's just pulling back, I'm going to jump in. And it's going to turn and go south. All right, let me add a couple of things. Christian, by the way, I saw the CEO for Lemonade on. They're going into auto sales. Interesting. Lemonade and Root both are just getting hammered. Great call on your short, Christian. Great call. For those who don't know, Christian had talked about his short position in Lemonade and also his short position in Root, 2 insurance companies. He didn't short Root, but both of them just getting hammered. All right, now, what else did I want to tell you? I told you about that. Dips, risk, fear. By the way, risk and fear, they're healthy for an investor or trader. Risk and fear, they're healthy for you. That's what keeps you insane. That's what keeps you from going too big. That's what keeps you from doing crazy stuff. Risk and fear. And remember this, if you're a trader investor, your number one goal is not to lose all the money you make. So your goal is two things: make money, but then don't lose it all after you make it. All right. So this part of my conversation is about don't lose it. Don't lose it. Be protective of it. All right. You work hard to make it. Once you make it, don't give it all back. Now, the last thing I want to add to this, now, I'll look at charts and all that for you guys. I talked about Coinbase. Oh, the other thing I wanted to bring up is I have been talking to you guys about my pricing model. Pricing. P for product, R for reward to risk, C for capital, S for scalable, M for market, and M for management. So today we're on the M for market. One of the things that you want to look at, especially when you're looking at trading these stocks and you're looking at them long term, how much market share do they have? How much market share can they grab going forward in the future? And is the market that they're in increasing? So I'm going to give you a couple of examples. A few years back, I'm going back further back, we saw a move from laptop and personal computers to tablets and phones as the smartphones and tablets came. One of my students said, came out with a recommendation on C Drive company. God, I can see the name. I can see the, God, don't get old, guys. It was a C Drive company. But anyway, they made C Drives. They dominated the market. And she came out with a buy recommendation on the company. And I said to her, look, probably a solid company, but understand this, they dominate a shrinking market. And I said to her, how many people are actually buying C Drive? How many people are actually buying laptops and computers now? I said, the number's actually diminishing. I said, in fact, the margins are really horrible. I mean, Dell Computer went out of business. So I said to her, they're no longer, the market is shrinking. I said, so therefore, if the market's shrinking, they're going to have a problem because their biggest product that they sell where they're making all their money, it's shrinking, which means there's going to be less market share. Long story short, the stock actually went down. It went down and hit new lows. Then eventually they retooled themselves, repurposed themselves, which a good company should do, and they're actually doing a lot better now. They're back. But the bottom line was they actually went down because the markets that they were in were decreasing. Now, let's talk about some companies. Let's talk about Netflix. Netflix, what's happening in their marketplace? Well, easy. Competition showed up. Competition's here now, all right? So before, when you wanted to stream, basically the only major game in town was Netflix. Now everybody's streaming everything. So you can have accounts with everyone. So their market hasn't gotten bigger. The market's growing, but their share of the market's starting to decrease. Competition. What you want to look for in a company, when you're looking for these great companies, you want to look at a company that owns market share and is increasing market share. Now, one of the things I talk about when I talk about pricing also is some of these companies, and I'm going to take this, I have no idea, I'm just using it for example. UIPath just came public. UIPath is artificial intelligence. There's no question that market for artificial intelligence is growing. It's getting bigger. I would imagine right now, I'm just pulling some numbers out of my head, I would bet donuts to dollars that the industry has a compounded annual growth rate, a CAGR, of at least 10%, if not more. So you got an expanding, growing market, all right? Who's going to be the player who's going to dominate that market and grow with it? That's the company we want to look for. That's the one that's dominating the market. Now, sometimes a company can actually become the market and actually own the market. But we want to look for companies that, one, are increasing market share in an industry where the market is growing. You got to make money with that. I mean, think about Microsoft. Microsoft, people say, well, Microsoft invented the PC. Microsoft is the reason why PCs took off. Maybe it is, but I know one thing. As more and more of us brought personal computers, we needed a platform to run it on. It was Microsoft. So if Microsoft just grew without anything else, if Microsoft just grew with the demand, the market for personal computers, that's what drove them. All right? So again, just some food for thought. That's my pricing model. Next time I'll talk about management. Real quick, one of the things that we say that I heard on Wall Street when I first got there, and I know they still say it, Wall Street bets on jockeys, not on horses. All right? Jockeys are management. Wall Street bets on jockeys, not horses. As far as we're concerned, the jockeys are management. All right. All right. That's everything I had on slate that I wanted to talk about. I'll answer any questions that you guys might have. I'll look at some charts if you guys want to look at some charts. I'm yours for the next 29 minutes. And if there's none, then I'll say have a great day and we'll go about our business. Oh, before I forget, don't forget, we are in earnings season. We are in earnings season. All right. You guys know Netflix missed the number. They hammered the stock. And what was interesting about it was I was, again, on a call with some students of mine, and we were looking at the 550 puts on Netflix. I don't know if they did it. I have to talk to them. I don't know if they did it, but we basically looked at the 550 puts. We looked at the contracts that are expiring this Friday. We also looked at the contracts expiring next month. The contracts that are expiring this Friday were $18, which would cost you $1,800. When I looked this morning, those contracts had gone from $18 to $40. All right, $40 and change. So that was a nice little trade if they did it. I don't know if they did it. By the way, it was their call. I don't make recommendations. I had a little, what's the word I want to say? I might have kind of nudged a little bit and then, and then kind of went through some numbers with them, but it was really their decision. And the reason why I bring it up again is these are just my opinions. I'm not your wealth advisor. I'm not your broker. If you decide to do anything based on what I'm saying, please speak to your wealth advisor, your broker, and get some, quote unquote advice from somebody who's licensed to do it. The reason why I'm doing this again, my lawyer, Mike, make sure that you're not making recommendations. Make sure, so again, these are not recommendations. These are my opinions. These are my thoughts. Hopefully my opinions and thoughts can help you put some money in your pocket. But again, make sure you understand what you're doing and make sure, if you don't, speak to a professional that can help you guide you through these waters. And by the way, I got a couple of former students that are brokers. So not that I'm making recommendations, but if someone really just jammed up and has no idea what they're doing and wants somebody, and again, I can't even guarantee they'll take your account. Some of these guys, some of my former students will only take accounts that are $1 million or more. But with that said, if you need some help, and want to find a broker, if I can find someone for you or recommend somebody, I will. All right. Any questions on this? Anything you guys want to look at? Any charts? If not, I guess if there's no questions, I'm going to sign off. Again, so I'm going to sign off. No, I'm not going to sign off, but I'll wait. But the other thing is, which I said earlier, I have actively, aggressively started watching, monitoring, and charting the cryptocurrencies. All right. I'm doing my research on them. And by the way, my research is I'm not researching them to actually understand every penny how they work. I don't need to know exactly how a car works. I just need to understand the basic movements of it. So I'm just trying to understand the basic movements. What makes Bitcoin different from Dogecoin? What makes Dogecoin different from Ripple? What makes Ripple different from Ethereum? I'm just trying to understand what the difference is in this and that. So when I trade them, I can understand, the correlation between them. And but again, I'm telling you, and by the way, when I do trade them, it'll be all based on technical analysis, most likely. The other thing I'm going to say to you guys again is, I'm just saying it, I believe the cryptocurrencies as a group is moving into a bubble, if not already there. I believe it's moving into a bubble. All right, when you have people out there buying cryptos based upon somebody told or they heard, or always just buy them because you always make money, I believe the cryptos are moving into a bubble. So just be careful with that, guys. All right, let's see. I don't see any other questions. Just looking. No questions. No questions, huh? You guys aren't trading anything? Nothing you want me to look at? You don't want to type it up, huh? You want me to talk about it? All right, not a problem. I'm just looking. I will give you a stock that I keep watching. It doesn't move, and it's interesting. It's actually got a great chart. Take a look at it. I know I've talked about it before. I'll take a look at this VISL. I talked about it before. I just got to write it down so I don't forget. VISL. Okay, is Academy Sports and Outdoors. I got to look in when the short interest comes out to see what's happening with their short interest. Couple things. One is great chart. Prime example of why you don't buy a stock on the dip. Buy it when it breaks. All right, buy it when it breaks a new high. That's the first thing. The second thing is they beat the number really good. Stock ran, and they've got a huge short position. And based upon technical analysis, come on, open up. And based upon technical analysis, it's formed a nice little pennant flag. All right. So, and volume is actually decreasing. So what that means is, for somebody who understands, when this thing breaks, it's going to break. It should break nice and hard. I don't know what the catalyst is going to cause it to break, up or down. Typically, a pennant will break in the direction that it came from. So in other words, if it came from lows to new highs and then formed a pennant, typically when it breaks out, it's going to break to a new high. If it came from a stock that came down in price and formed a pennant flag, then it's going to break to the downside. That's been my experience. So that's another thing. By the way, guys, yeah, the CPACs, the special purpose acquisition corps, that bubble burst. Not trying to be funny. It was another bubble. People were buying these things. They had nothing inside of them. It drove me crazy. They didn't have anything inside. They raised money and said, we're going to go out and buy something. All right. Based upon, and what you were doing was, this is interesting. Wall Street, once again, betting on jockeys. They were betting on SPACs, based upon who the jockey was, who senior management was. They didn't have any assets though. All they had was cash. And these things got bid up. I didn't understand it. So the bubble finally burst in that. And it was crazy too, because Wall Street, you can always tell when bubbles are forming. Wall Street kept bringing these things to the public. Here you go, bang, 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 bang. They just, there was a couple of days there were 10 to 12 of them coming public a day. And people ask me, I'm like, I won't invest in it. Show me what they have inside. Let me look at the assets they own. Let me look at the company they own. Then I'll make a decision. All right, let me do this. VISL. VISL, Vislink Technology. I'm going to a weekly chart. I always go to my weekly charts to see the volatility. So immediately, I went to a weekly chart, and I don't know where this stock came from. I'm just looking at the chart. All right. This is a prime example of something I would never touch. No offense to whoever sent this to me. The stock, I'm going back to June of 2018 when the stock was at $50 a share. It looks literally like the downside of a hill going into a valley. All right, so that's the long-term view. The short-term view, the short-term view, no offense tended to whoever sent this to me, you couldn't pay me to touch this stock. No way. I have no opinion on it other than it's trading at $2.30 a share. It looks like it's right at the near-term support. It breaks that 230, it's going down from there. If it does go higher, you got major resistance at $4 a share. You couldn't pay me to touch this stock. No offense, whoever gave it to me. QFIN. By the way, everything I do is based on technical analysis, what I'm doing right now. All right, QFIN, switch it to a weekly chart again. Stock was public. Here's what's interesting. See, I love this. So stock set a new high. I'm looking at a weekly chart. Set a new high back in April 2015. April 2019. Not 15. April 2019. What's going on, Chris? All right. Understand what I'm about to say. I'm looking at a weekly chart. It pulled back from there. Now, why am I saying this? Professor, just buy the dips. I buy the dips. Well, this thing pulled back from $23 a share, and over the next year, until 2020, went from $25 a share down to $8 a share. And then from there, went down to $6 a share. Just recently, just this year, the stock finally broke through that $25 number. Again, I'm looking at a weekly chart. Now, I'm going to switch to a daily chart. All right. Right now, major support's at $22.56. $22 is your support. It breaks $22. It's been down here a couple of times. If it breaks $22, it easily could hit 17. All right. You got some minor resistance at 27, and you got some key resistance at the old high of 35. If you're buying it in here, again, I put a stop loss in probably around $21 and change, right around there. Yeah. And I guess, I don't know anything fundamentally about the company, but I guess I would look for it to try and challenge. I'd be really happy if it broke through that 27.50 and challenged that 35. Again, I don't know what they do. I know it's an ADR, but that's what I'm looking at. That's what I see. Yeah, I guess the big question is, if you're buying this for a trade, yeah. If you're a long-term investor, I guess you could stay with it. It hasn't really broken down. It's just going through a period of consolidation. So basically, since January, the stock's been trading between 22 and 35, just going back and forth. And it's narrowed down now. This new trading range is between 22 and 27. All right, let me see. Anybody else? Any other stocks you want me to look at? I talked about the CPACs. Oh, no problem. You were thinking about going long? My opinion, I'm not your wealth advisor. My opinion, this stock's going to have a lot of work, this QFIN, to get through that 27, to get back to that old high of 35. In my opinion, I'd wait till it got through that 35. It could take a couple of weeks, couple of months to get through that get through that resistance. And I guess the reason why I said I would wait, there are other things you can look at that are trading better than this that you could buy while you wait for QFIN. All right. Unless there's something that you know for a reason why you want to buy this thing long term. And the other thing too is, if you're buying it long term because you think the stock is going to 100 to 200, 300, the difference between 25 and 35 is not going to make a big difference in your portfolio. If you're short term trading, it might, but if you're basically long term hold where you think the stock heads to a couple $100 a share, whether you pay 25 or 35 for it, it's not going to make a difference. My opinion. All right. FSR, Fisker, weekly chart. So again, this thing started trading activity came in July 2020. Another stock. All right. Bear with me a second, guys. I know you asked me to look at FSR. When I look at these charts, it brings something to mind. I got to say this to you. All right. And that is, this stock has a tremendous amount of volatility in it, risk. So I guess what I'm saying to you is, I like going into airplanes and flying, but I'm not a skydiver. Skydiving is too risky for me. So I guess what I'm saying to you is, I understand if you want to trade, but understand if you're trading this, you are taking on a lot of risk. All right. I'm looking at the stock. It's going from $10, $8 to $22. Then it pulled back to $15. Then it ran to $32. Then it pulled back from $32 down to $13. If you are into volatility, roller coaster rides with your money, this is a stock to trade or own. If you're not, my recommendation is, don't even waste your time with this company. I don't know what they do. I don't know who they are. So I can say that with true respect and love. I don't know who they are, what they are, but the bottom line is, I wouldn't touch this with your money. I would feel bad. Richard's saying, what about in the long run? Well, again, Richard, in the long run, and let me say this. People will say to me, I've had this happen before, and I'm writing stuff down. I've had this happen before. Where somebody tells me they're looking to buy a stock and they're willing to hold it long term, and they say, great. I said, I give them my opinion like I did on this Fisk. And they say to me, I'm Fisker, I'm willing to hold it long term. I'm okay, great. and then they buy it, and the stock does nothing but go down or go sideways, up and down, and they're sitting there and they say, well, I'm willing to hold it long term. I'm like, okay. And as soon as the stock gets hammered, which it shows the habit of getting hammered, they sell it and lose all their money. And I go to them, I'm going, you said you were long term. If you said you're long term, you got to give it long term. So I guess what I'm saying is, if you say it's long term, do you have the discipline to make it stay long term? All right. Now, let me just go back. So Richard, my opinion on this Fisker is I wouldn't touch it. If you are gonna touch it, I'd be really quick with it. I'd be cautious with it, and I would look to take my profits as quick as I could, and I cut my losses really quick on this. I wouldn't give it much room. All right, I'm sorry, I'm looking at something else. Let's see. Before I bounce, could you please CoinBase competitor? Oh, a Voyage. It pulled back. I looked at the chart on that, Christian. It's VYGR, Voyager, Canadian stock. Yeah, I looked at it earlier today. It pulled back. Hold on a second. So it's pulled back to support. A major support right at $20 a share. It pulled back to $20 a share and bounced off that today and closed at 24. So it looks like it's trying to get back into that old trading range, which is between 27 and 37. But it literally pulled back, and I guess I know a lot of it ran up ahead of the CoinBase IPO, and then it pulled back because of the CoinBase IPO profit taking. But then it had a bounce. So technically, it looked long term the chart looks really nice. So I would say it's not a bad play. I just don't like buying Canadian stocks, but not bad play. All right. I'm just checking my time. All right. Jonathan, you're asking me about GameStop and AMC. GameStop and AMC are, what's the word I want to use? They're not trading like stocks. They're trading based upon news. They're trading based upon people trying to squeeze them up and squeeze them down. Again, GameStop, GameStop, until you can show me their new business model and how they're generating revenue, how they're going to make money, GameStop is nothing more than a speculative play. As far as I'm concerned, GameStop is like going to Vegas and rolling dice. All right. I mean, that's pretty much what's going on. And what I mean by that is if the Reddit guys and everyone get behind and push it and talk about it, they're going to push it up. If that's the case, if you can get in early enough and they start to push it, run with it, but take your profits quick. AMC, same story, but the difference is AMC might have a shot because of the pandemic ending. AMC actually was a really good business. The movie theaters, they did relatively well. I traded the stock in the past. There is a legit business there. So there is a shot that this thing could come back business-wise. All right. Twin, you're talking about the GDP in China. One of the things that they talk about on Wall Street, maybe it's gotten a little better, but whatever they come out with the GDP for China, divide it by 2. China's been known to exaggerate, but still, that's still good. Yes, I think we're in a global economy. I think we're in global markets. I think you can make money in China just as easily as you can make money in our markets. The one thing I'll say, though, is, again, when it comes to these stocks, just be careful. And the reason being is they're not moving on our stock market. They're moving based on their stock market. But the other thing to be careful about is the accuracy of the information that you're getting on the stock. So there's been a number of these ADRs, Chinese ADRs, that have pulled back because of fraud and some other things that were involved in the company. And we basically, us as investors, we basically are looking at data and we're looking at the financials to see what we think the company's worth. And if these guys are making up numbers or so forth, that's when the risk comes in. But I do think, which I've said before, China is an 800, 900-pound gorilla. There's no question. That's why every corporation went over there and is trying to do business over there. So yes, I think, I'll talk to you later, Christian. I think there's some opportunity in those markets. I know that a couple of professors I know actually did some white papers, just came out recently, a research paper on the Chinese IPO market. So I do think there's opportunity there. All I'm going to say is just be nimble, be careful. All right. I got another 10, actually I got another 8 or 9 minutes. Anything else you guys want me to look at? I talked about ASO. Oh. For those who are still here, which I've always told you guys, when the market's not trading well, look at the recent IPOs that are not trading well. And I'm here to tell you that there's a number of IPOs that were hot IPOs that just, I have them on my watch and they just do nothing but go straight down. Bumble comes to mind. Bubble comes to mind. Affirm, I can just start going down my list. AFRM, Affirm, sitting at its all-time low from the IPO. Bumble bounced off its all-time low just yesterday, which was set around $55 a share. Bounced off that all-time low. Give me a stock, and pretty much, the ones that aren't, IPOs, a lot of them are not trading well at all. Oscar Health. Stock was priced at 39, opened up at 37, tried to get back to 37. Oscar Health now make sure I get this right. Oscar Health since March now has gone from $30 a share down to $22 a share. I can give you more and more. The only reason why I bring this up to you guys again is if you're looking for things to short when the market's not doing well, if you're looking for stocks that aren't holding up, check out the IPOs over the last 6 months to a year, and that's one that you can look at. Let's see. All right, Jonathan, I'm going to do this for you. IDRA, pharmaceutical company. You got a big gap here between $5 and $2 a share where it gapped down. I'm not sure why it gapped down, but that was on heavy volume. So probably with some negative news. I don't know the company, but whatever drove it down here, it drove it down here in volume, and that's staying down here. So if you're in it, cut your losses. If you're just looking to buy it, understand that there's a reason why. Literally, the stock closed one day at $5 and change and opened up the next day at $2. So whatever that was significant enough that and it wasn't earnings. So I would be careful. There's something going on here. Penn Gaming. Guys, whenever you look at charts, look at a weekly chart first. Always look at a weekly chart. Penn Gaming might be coming down, but it doesn't look that bad when I look at a weekly chart. So now I got to look and see on the daily chart real quick. I got time. So now I'm looking at a daily chart and I'm trying to figure out what happened here. I don't think this stock has come down a lot. I think if you brought it on the breakout to the new highs, you sold out. But right now the stock has come down again. You have earnings come out in a couple of weeks, so it's in a downward trend. So near term, let me see if I can explain this. Near term, you're in a downward trend. Long term, it's going sideways. If you're in it, tough call here. Tough call. If you're in it, I would say if you're in it and you weathered the storm this much, I would say stay with it. If you're looking to buy it, you know my rule. I would wait till it gets through this area and gets through that old high and be above the 10-day moving average before I look to buy it. So I would just be patient with it. Let's see. Who's this waving to me? All right. I got to hop. I'm looking at my time. Unless there's another question or two, and let's see, I got 2-3 minutes. So if anyone has a chart, anything they want me to look at real quick, or a quick question, bang, I can answer it. And just so you guys know, the reason why I do that is if my goes over an hour and Instagram shuts me off, I don't get the recording. And as you guys know, I like to keep all these recordings. So that's the reason why I keep it under an hour. And my closing comment again, remember guys, these are my opinions, my thoughts. Anything that you decide that you want to do, make sure that you're speaking to a wealth advisor or someone that's knowledgeable that can give you good advice. These are just my opinions and thoughts. Thank you to my lawyer. I must always state that. I want to make sure you guys understand that. My opinions. All right, I'm about to hop. I don't see any more questions. I appreciate you guys coming and stopping by. I look forward to seeing you next week. Again, inbox me when you guys are making money. Tell me what you're doing, how I can help. I'm always interested in hearing about that. And have a blessed, great day, and I will see you next Wednesday. Professor Milligan is out. Thank you, guys.